All right, I hope everyone's having a nice weekend. This is going to be a pretty in-depth video. I'm going to be going through a lot of different charts. I think this is a pretty pivotal moment in markets. September seasonally is pretty bearish for equities. Everyone seems to be expecting that. And so let's get started. I'm going to start off with Bitcoin weekly. And I made a video that goes into a bit more depth on the low time frame on Twitter this morning, but again, nothing's changed. The structure on a high time frame is essentially where it was last week, right? So not a lot of updates there. We still just are sitting on top of this massive accumulation structure that was broken out of, in my mind, very similar to what we saw in 2020. And we just have a series of higher highs, higher lows, higher highs, and we're sitting at a higher low. Right, I will start to entertain a different path once we get if and when we get a weekly close below 24.8, 24.7 region, right? Because as of right now, we are in this range, this SOS. If you're pointing at this schematic on the right, and we define this accumulation range as everything that preceded the price action, and this BULPS kind of being the top of that range, which sits right now at 24.7 and change. We're over it, and we're just consolidating over it. And again, remember, the sentiment gets the most bearish at these extremes, but that is when the high time frame rules and your emotions have to be kept in check, in my opinion. So that's it, folks. That's it on Bitcoin. Just continuation of the thoughts that you've heard me say, and expansion in my mind is our next macro move until proven otherwise. Let's move to just a quick short time frame, low time frame update on how I kind of am visualizing this price action. I went into more detail in my Twitter video, but I'm just going to quickly just run through how I'm viewing this on the low time frame. So this is that price action back in June, right? And I had reference a price action back from the summer lows of 2021 when we had the China mining ban. The news was awful. If you recall, back in June of this summer, 2023, we had the Coinbase SEC news, the Binance FUD series of lower highs, lower highs, lower highs. This key level at 25 swept, right? Something that you'd see in this first schematic, right? A nice spring event. And then we had an impulse 1, 2, 3, 4, 5, and then the bigger impulse cleared all of this price action. Okay, so what are we looking at today? Well, we're looking at not the same similar setup, but in terms of what accumulations after liquidation events can look like, that's what we're illustrating here. And so there's a couple possibilities that I see in my expansion bias. Okay, let's put it that way. Possibility number one, right? And let's point to the number two first, right? You get this massive liquidation cascade. You get a run off these first lows. Those are swept, right? That's kind of this ST in phase B. And we got this scam pump on the GBTC news and kind of a retest down towards this ST in phase B. That could be this LPS. That could potentially even be the spring. Who knows? And in this scenario, the assumption would be the lows are in, and we just kind of get a consolidation level to level, and then the market makes its move, right? Something like that, and it engulfs all of this price action very quickly. Scenario number two is we're somewhere prior to the spring in this region here. And so what would that potentially look like? That could look like a scam up, right? Up, we're out of this range, deviation below, and then you get your move into this region, spring, and then we'd see a quick potential move up and out of it. Obviously, there's two other scenarios, right? You could just continue to crab sideways, which I don't see is my highest probability given the extremes in the general markets in terms of the dollar's move over the last 7 weeks. I'll get to in a moment, as well as the reversal that we saw, potential reversal we saw last week in TradFi as well. And then the fourth consideration is that this isn't a macro high or low, and in fact, the market is going to be taking a move lower. That's the least probable in my mind outcome. Again, none of us know what's going to happen. That's just the way I'm looking at probabilities, and the market ultimately is going to decide. All right, next, let's move along to the Nasdaq. And right now I've got the Nasdaq weekly chart up. And, you know, as we talked about last week, this correction went about a week longer than I had anticipated. But, you know, I've got the Bollinger Bands up here, folks. I've got a weekly chart. I've got your RSI, your relative strength down below it. Just a perfect tick off of two key levels, right? If we look at this entire base, you know, you got a rejection here, you know, the market's just trying to come out of it, trend change in this region. And now we break out of this base that kind of goes back with a few touch points and also dings that midline of the band and makes a reversal. My full expectation is for all-time highs to be next. It may not be in the path that we're expecting. I mean, we could get, this could be an A, B, C correction, something back down to here prior to moving back up, or base case remains that this was a reversal and we're going into price discovery, all-time highs, the next macro move. Again, we shall see. That's just the way that I am reading the markets at the moment. Looking at the monthly time frame on the Nasdaq 100. So one of my favorite charts. You guys have seen me post this one from time to time. You know, I look at what's been going on in markets to be, you know, in essence, the prequel to the blow off top that we just haven't seen in the secular bull market that began back in 2009, folks. This is what a blow off top in secular bull markets looks like. This area here, in my opinion, was more of this first sell-off, okay? And this here was more of the bear trap. And what's in front of us is, you know, hey, new paradigm. AI is going to change the way that all these tech companies do business and make things more efficient. The news is going to be very bullish. We avoided a recession. All the news is going to sound great, in my opinion. That's a time to be cautious. That's a time to be cautious. But looking at this monthly chart, you know, we got a cross on this MACD, and anytime we get a cross on that MACD from these levels, you know, that illustrates the beginning of the move, not the end of the move. So that is how I continue to read the Nasdaq 100. Next up, we've got the dollar, and this one, the dollar has been a bit, you know, a bit stubborn, right? And this has gone much further than I had anticipated or expected. But let's look at still, where are we, right? Where are we? We are still in the confines of a downtrend, in my opinion, okay? What is the strength of these moves, of these highs that are being made here in the context of this downtrend, these counter trend rallies? Well, there's more strength in the prior moves, but price is lower, right? And so here we have the dollar at 106, and its strength is the lowest out of any of these moves. And so that's a sign of exhaustion to me, folks, right? If this move is stronger than this move back here, and it had true strength, one would expect it to be expressed in price, but that hasn't been the case. When's the last time we had 1, 2, 3, 4, 5, 6, 7 weekly green candles? We haven't had that in 10, 12, 13 years. It's been a while. This doesn't mean we can't get another green. It doesn't mean that this trend potentially isn't changing, right? You can redraw this trend line any way you want, right? You can draw it like that, and you've got, you know, a potential breakout, kind of retest and resumption. That's on the table. But when I look at this candle specifically, okay, when I'm looking at this candle, what type of candle is this on the weekly? That's a That's a hanging man. That's a potential bearish candle structure, and one that you would see at key inflection points of trends changing. Okay, so we've got that candle, we've got 7 in a row, we've got higher RSI but lower price, and even back when we were a 1.5 higher, and we're under this macro resistance, this weekly resistance that you guys have all seen me draw out all the way back to 2016. So we shall see. We'll see which way the market decides, and then the one thing I will also say is, if the dollar does make a breakout move, okay, does that just guarantee that stocks and Bitcoin are going to go down? Let's see. Let's go look at that. Let's go look at the last period of euphoria in markets, that blow off top I showed you on the Nasdaq. Let me pull it up on a different chart. That one doesn't go back as far. All right, here we go. So let's go back to 1999 to 2000. Let's just see what the dollar did in that time frame. Okay. 1998 to 2000. This was the .com bubble. Okay, guys. I did not know this chart was going to illustrate it this dramatically. I had known this was the trend, but that's a heck of a move, right? This is a heck of a move in the dollar, almost unprecedented, right? We went from 91 to 120, and stocks blew off, made a blow off top. Okay, so just pointing to that to illustrate that doesn't necessarily guarantee anything negative is going to happen with stocks, with Bitcoin. All right. Next chart, ARK. ARK is a great proxy for riskiest growth. Okay, when I say riskiest growth, I'm not talking about it's risky to invest in ARK or any of that, but just more the market's perception of growth and riskier baskets of growth within the tech sector. And when I look at, I've got the 30-week up here, and looking at this accumulation base, looking at this deviation out of it, looking at this reclaim of the 30 that happened last week, this is to me just a stage 2 breakout, folks, right? A, B. And I entered ARK here. Not financial advice, but this is one of the reasons why. Invalidation on this is really easy, right? A weekly close below 39.28 is so, from an invalidation standpoint, this one's pretty clear. And my expectation is resumption of this trend, but I absolutely could be wrong. The market's going to tell us that very soon. Let's look at Mara. Again, the miners, MSTR, I believe, are telling us much more than Bitcoin is right now. At the margin, Bitcoin at inflection points is really tricky to get the best sense of the overall health of the market, given how many traders are involved, how many stop losses get triggered when trend lines break, things like that. Moving averages are lost, but things like Mara, where you don't have as much retail participation and leverage and eyes on it, are more indicative. All right, so we've got this 30-week up, and you all have heard me talk about the significance in my mind of this 30-week. Last week we closed right at it, right? This week we had a strong reaction off it, and even though Bitcoin revisited its range lows, Mara didn't, showing relative strength. So this, this is a point for the bulls. This is a point for, this correction being over potentially, and the next impulse being in front of us. Okay, next we've got the 10-year, the 10-year yield. And so, I keep hearing that your yields are about to break out. Your yields are about to break out. I have no idea what the heck's going to happen to yields. I'm not an expert in this area. What I do have is a weekly chart up, and what we have in front of us is a double top. Right now, it's a double top. Could it come down and then retest and take off? Absolutely could. But we've got a double top. We've got relative strength lower at the second top than it was at its first top. So failure, exhaustion of momentum occurring at the same level of price without the ability to break above it. That to me is bearish. So my instincts tell me that the probabilities for the next macro move on yields is down. And could that be a straight line? No. Could it have some consolidation fake outs along the way? Sure. Could I be wrong completely? Sure. But that's just the way I'm reading that chart. All right, next we've got SPY. And I had posted, I think we reviewed this one last week, looking for a reversal this week and last week, and we got it, right? I think that for correction of the micro move within the macro 3 is in. I think our next move is to all-time highs to make this macro 3. That's not to say we can't get some early weakness next week, right? Nothing is a straight line, and that's also not to say that I'm wrong on this idea. And this isn't just a ABC correction, and the move has a little bit more to go. Okay, and I'm mislabeling this so that's also a possibility. But for now, my bias is in terms of what we did with this weekly price action, right? The last week's price action failed to close above the prior week's open. This week, not only did it close above the prior week's open, closed above the 2 weeks, 3 week open. Okay. And so that's a sign of strength to me. We shall see, monitoring this very closely. Next, we're going to move to ETH. And again, folks, not a lot has changed in this. And so the analysis is going to be quick here, right? We're in the same place, right? And the only difference is traders leverage getting wiped out on absolutely really nothing happening. In the macro structure, this Adam and Eve double bottom, just beautiful accumulation range that was broken out of, and now we're getting kind of a retest. And why did all these stop losses trigger here? Why did they trigger with Bitcoin? Well, what happened? This 30 week that I've been talking about, its importance, that got breached, right? That was breached. And so boom, those that trade based on things like the 30 week were stopped out. Those that are trading on fundamentals, and I shouldn't say trading, those that are long-term investors, right, don't care about things like at the margin, things like the 30 week, right? Like in terms of my trading, my swing positions, I most certainly will use things like the 30 week to inform swing positions. But in terms of long-term, if it gets below the 30, I'm just trying to accumulate more. Like anything near it, below it, in either a basing phase or an uptrend is when I'm looking to accumulate. So that's not financial advice. That's just, again, I want to give you guys 2 ways that I look at this. And so, yeah, we got a breach, but we're still kind of above all this price action. And my bias here is expansion is next. Okay. Let's move to others. The others chart is really this excludes Bitcoin and some of the other top cryptos by market cap. But look at this chart. This is the 30 week that's up. It just looks like a position of strength to me. I mean, you've got a downtrend, you've got a reclaim of this 30. You're approaching this downtrend, and everyone talking about Bitcoin dominance, about to go to the moon, and I'm not in any others, but I'm literally looking at this objectively, saying this is a bullish type of chart. It was bullish back here, right, and broke, and then we got a retest a lot further down. So that's always a possibility. But again, where I believe we are in this cycle is different than where we were back here. I believe we're more closely aligned with this area of the cycle. So we'll watch that as well. Next, I'm going to do gold because I get a lot of requests for gold, and I've got a monthly chart up on gold. And folks, this chart just looks bullish to me. I mean, there's no way. I don't have any conviction. I don't own any gold. I don't, have any strong feelings of where it's going. But if I'm just looking at this going back to 2000, we're in a very clear channel. We're now flagging. I've got the Bollinger Bands up on the monthly, right? And we're still above that midline. You got this triple top we're working on. Typically you get a rejection up here, and the next move is going to be towards the bottom of this, right? So up here, triple top, 1, 2, 3, bottom of the Bollinger Band. 1, 2, back towards the Bollinger, the bottom of the Bollinger Band. But when it holds that midline, when it holds the midline, that's kind of telling you something, right? We already got a breach here, and back to the bottom of the midline, which also coincided with the trend. My bias here is just continues to be, if we're just looking at this as a type of a flagging structure, some type of breakout to 28.94 is a target. Something in that range within the next year, maybe two. So that's my read on gold. Last chart will be the Dow Jones. Actually, I'll do one more chart after that. And the Dow Jones, not much has changed again, right? We've got the 30-week here that it just continues to respect, starting to coil up. I like the move, and not quite getting to the 30-week the week prior to last, and I just continue to see resumption of trend as the next move in the Dow. Final chart is, I keep hearing, I'm on these spaces on Twitter, and I keep hearing things about liquidity and where's the liquidity going to come from. And folks, I'm not smart enough to trade on based on liquidity, right? And I think as time goes on and more participants start talking about things like liquidity and all this, those that are going to win are going to be either the long-term investors in solid assets that have exponential market opportunity in front of them, or folks that can kind of say, which way is this going to go, that have that ability. I don't have that ability, but what I do have the ability of doing is reasoning with what's in front of us, the facts that are in front of us. And the facts that are in front of us is these are the aggregate money supplies of the largest M2s in the world. Okay, that's this equation up here. And where we are now in terms of the amount of money in the world today, if we go back to, let's say, when Bitcoin made its all-time high in April of 2021, we are well above. So there's more liquidity in this system today than when Bitcoin was at $60,000 in April 2021. So when I keep hearing, where's the money going to come from to make something like Bitcoin move, or stocks to go to all-time highs? Well, we're 6% away from all-time highs in the Nasdaq, folks. And here we are, basically at previous all-time high in terms of liquidity around the globe. And so, the chart speaks for itself. I don't know which way it's going to go. These are bullish looking structures, right? You get a flag, then you got another flag consolidations, and the probabilities on flag consolidations in uptrends tell you that more often than not, they tend to break up. Okay, not a guarantee of anything, but just thought I'd share that with you guys because I thought keep hearing that term a lot, and the reality to me is that to pump a $500 billion asset like Bitcoin, there's plenty of capital in the system at the moment to get it done, because that already happened. All right, and so that's it for the video update for the weekend. I hope you guys are having a great day, and look forward to doing more of these. Take care.